like a 1 minute brief opportunity just to introduce yourself and I guess like why you care about blockchain. Kellogg, would you like to kick off?
Sure. My name is Kellogg Fairbank. Is this on? Yeah. My name is Kellogg Fairbank. I've been in payments, the old world payments, if you will, for about 9-10 years now. Worked for a company called Braintree. Braintree was one of the pioneers for mobile payments. And the company grew very quickly within 3 years' time, sold to PayPal, and very successful exit. From there, I've been doing consultancy work with my own company, Opus Capital, and came across a company called Monetha. And I've been with Monetha now for about 6 months. Monetha is creating a decentralized trust and reputation platform that is triggered by a payment, and I can go into that more if anybody's interested. But it's something that I see a huge potential for, and that is with respect to the trust and reputation that is built upon a payment. And so
thank you, Marlene. Do you think that this, I guess, like artery of innovation deserves the amount of capital that entities, perhaps like Banker, are being given?
Thank you for this question. No, I think it's a tricky question, if you will. So I think if you have the right idea, the right vision. So let me backtrack a little bit. Today, in the ICO market, there are a lot of companies that are raising phenomenal amounts of money based upon a white paper, right? And if we look at the traditional fundraising, methods, VC capital or seed rounds, whatever it may be. You first build a product and then you raise the funds, right? And we're in a completely different way of doing things. And I think with ICOs, there are companies that are raising significant money, and a lot of them will be probably not around in a couple of years, right? I think what you need to do is, if these companies that are raising these funds, you have to look at the teams, you have to look at the vision, the product. How are they going to actually realize product? If I look at Monetha itself, I actually did my due diligence before joining as an advisor before the ICO, and then after the ICO, I've joined the company. I did my due diligence, went to the offices, met with the teams, researched product, see if there was a product fit in the market, identified some of the early partnerships that we could potentially, companies that we could be working with. And for me, and I've been in the payments industry for a long time, for me, it provided me with I decided to join the company, and I would not bet my reputation against something that could essentially take it away, right?
That's a nice story. So they raised, was it $37 million? How are they managing that money? Because I guess when they raised that, it was a small team based in Lithuania, like you said, that not a huge amount of experience of running companies necessarily. How are they faring with suddenly having $37 million in the bank?
So they're not going out and buying Lambos, as everybody else would say in the ICO world. So to be perfectly honest, I don't know if anybody realizes this. When you have an ICO, it's not that you necessarily have that day you have 37 million in your bank account, right? Because it's in a digital currency, and a digital currency needs to be converted into fiat, which is euro or USD or whatever it may be. That takes time, and it takes time to do everything according to the regulations, right? Regulators. You don't want to, we did KYC on our ICO, and we did everything according to the book because we're a company that's built for the long term. And if you look at the way that they're spending the money right now, they are hiring, and they're hiring very, very well. They are not spending money in terms of marketing, that type of thing. You'll actually be surprised with what you would see is, a lot of these conferences that they're going to, they're being asked to come there, right? And people think that they're actually spending a lot of money on those types of things. That's a complete opposite from the truth. They're doing a very, very good job of building up the company and building a product that is built for the long term.
Thank you. Marlene, do you think the people Just to expand on that, but open it to the rest of the panel, I guess it's wonderful that, again, you can access this capital and there is actually early-stage liquidity. Is there an issue, though, at the moment that there is no accountability for that? If you were a publicly traded company in the real world and your stock tanked 60%, the entire management team would probably be moved on and stuff like that, because there are rights or rules around the asset that is publicly traded that provides accountability. Is that the case now? If not, will that change, or should it not?
I think that's a good question. I think it's sort of a catch-22, if you will. I think there does need to come regulation in the sense that people are getting scammed today in ICOs and that type of thing. People are not doing enough research. There's a lot of FOMO, if you will, which is, in case nobody knows what FOMO is, it's fear of missing out. And so people are investing in things that they're not doing their due diligence and research on, and with the fear of missing the bus, right? So that's how people are losing money. I think with regulation, there will be certain measures in place that will protect the normal investor, if you will. But on the other hand, I think there are a lot of people that do invest in ICOs in the crypto market, for instance, because there are gains of 600% in one day, as opposed to 6% over a year, right? On the typical stock market, and I think that's it's very much one of those things where it's a high, right? And people enjoy that, and it gives them a rush.
Maybe too much. Yeah. I'd love to dive into about 100 things, but is there a question from the floor for Marlene or Daniel? Go ahead, Toby.
Following on from Kellogg's point earlier, I've been thinking a lot about the potential for a really severe liquidity crunch, because basically there's all this money going into the ICOs, and then it's going to need to, no one's really going to want to convert it back to fiat if you're owning EOS or Banker, unless it's very widely traded. So they're going to need to exit via Bitcoin and Ethereum. What happens if Bitcoin and Ethereum tank to all the ICOs?
Well, so what you're talking about is the liquidity of the funds that are raised, correct? So typically, and I can only speak for Monetha itself, what we're doing is we're doing a 24-month ramp. So we have 24 months worth of funds that we're cashing out at a specific time. And then the rest are put into other things such as securities, as well as not just keeping it in Ethereum, but making sure that it's built for the long term, and that we can actually, as the price goes up as well, then we can actually benefit from that. But we have 24 months wrap on that, and we just via our banks.
Yeah.